As we close down the first month of 2021, people are beginning to ask in increasing numbers whether we are entering bubble territory on the equity markets, not just equities, bonds and property as well. If you believe this to be the case and you want to act by withdrawing some investments, what do you do with the money? Do you keep it in cash or where else do you put it? Well, Simon Popple joins us now from the Brookville Capital Intelligence Report. Simon, good to talk to you. Thanks indeed for your time. This is becoming a little bit more and more talked about, that we've got this situation where some people are prepared, perhaps possibly maybe, to act ahead of time, let's suggest, and withdraw some investments. Let's take a look at the situation that they're facing, if that is the case and that is what they're doing. How do you view the situation?
Well, people are viewing some of the markets as, let's say, a little bit toppy, and they are, withdrawing, selling some of their investments, liquidating some of their investments, and I think the view is, we'll just go to cash, and this is sort of a large sigh of relief, and they go to cash, but without really thinking about what that means. And I think in these interesting, challenging times we find ourselves in, people shouldn't switch off as soon as they go to cash. They should think about all the FX permutations of actually being in cash. What currency do you want to be in? How do you actually want to hold that cash? Where do you want to hold that cash? And there's quite a lot to think about. It's not just a case of going to cash.
You've got a chart I wanted to bring up to show, I think, to sort of demonstrate this point, if we can, and talk a little bit about this. Now, there's a lot of numbers on this screen, and I'm not going to go through every single one. Clearly, it's not the point of this. How do you describe what's going on here to give you the support that you need to show that holding cash is not necessarily the right thing to do?
Well, I think the first thing to note here is this is predominantly green. So gold has typically outperformed the major currencies since 2001. So having a proportion of your cash in gold, if you look at the averages along the bottom as well, if the future is anything like the past, would indicate that holding some of your cash in gold may be a sensible thing to do.
So this is just holding gold as an alternative to those investments that have previously been in the stock market or in property, coming out, going into cash, and taking that cash and buying gold with that cash. Is that correct?
That's right. I mean, you've got storage costs on top of those numbers, which is around sort of 65, 70 basis points a year, depending on where you store it and how you store it, etc. But I think that people, they should at least explore holding a proportion of their cash in a tangible asset such as gold. Previously, one of the big arguments against doing this is that gold doesn't yield anything, which is perfectly understandable. If you've got a treasury that's yielding 6% and gold yielding nothing, then I can understand why people would want to be in a treasury or something like that. But because a lot of fixed income instruments aren't yielding anything, and in some cases you actually get a negative return, I think that gold does enter the equation, and people do need to think about it.
Yeah, let me just bring the chart back again, because I want to talk a little bit more about the numbers as they stand. On the far right-hand side, you've got an average there, and of course at the top of the chart, you've got all the different currencies themselves. And in fact, as I said, if you look across the chart generally at the years when we've seen red numbers, there are not that many that appear across the whole chart. Interested in the far right-hand column, that's really interesting to see how gold has appreciated against individual currencies. This is the average on the right-hand side, and just twice since the beginning of the century have we seen gold underperform. I just really wanted to talk a little bit more about the fact, you've already mentioned the fact that gold doesn't yield anything. But of course, when you do liquidate your assets, you are in a currency. So there is a currency risk, isn't there, in buying gold in the first instance?
Well, if you just go to cash, you've got a currency risk straight away, depending on what currency you want to be in. And you're absolutely right. Yes, there is a risk that you're taking with the gold price, and I'm not suggesting people put all their money in gold. But all I'm saying is, if you look at what's happened in the past, and look at the low to zero to negative rates on fixed income products, then based on the performance of the past, it would indicate that you should at least think about having some of your cash in gold. And I think the other important point to talk about here, Jeremy, is not just the averages on the right-hand side, which are the averages for the year against a basket of currencies, but if you look at the bottom of the chart, you've got the averages for the currencies over the period. And a lot obviously depends on how long you plan to hold your gold for. But you can see that in both cases, both on an individual currency and across currencies, gold has performed pretty well. And I think the other thing I'd just add to that actually is if you hold some of your cash as gold, then when you actually come to liquidate it in a year, 2, 3, whatever, however many years' time, because gold is a global asset, you've got a choice as to what currency you liquidate it into. So, I think it is important to have this sort of these options, and I think people will appreciate that.
Yeah, let's talk a little bit about the gold price. I know you've got a chart in just a few moments' time talking about sort of the money supply side of this, but I just want to take a look at this chart of gold itself. This is a line chart showing us when it went to that record high back in August last year at over $2,000 an ounce. Since then, we've seen this line pull back a little bit. Currently trading at 1838. What's your view about where the price of gold is going?
Yeah, well, I mean, gold, like any commodity, is very volatile. But if you look at all the money printing, which is the slide we're going to move on to, then as you can see, gold has correlated reasonably well with the increase in the money supply. And so if you believe that more money is going to be printed, and I think that most of us do, then if the past is any indicator of the future, there's a good chance the gold price, could go up. And again, could be a useful way of diversifying your portfolio.
So you're saying then it's better to be in gold than it is better to be in a currency which is seeing money being or assets being printed, such as what, QE? I mean, what is it that's twisting the markets at the moment? I mean, we've got a lot of central bank action in the markets. We've got a lot of extra money in the markets at the moment. We still don't have any inflation, do we, yet, which is something that normally stirs an upside to gold. We appear to be in this zero world inflation. How do you price the inflation picture into gold? What's the future for gold based on the fact we're not getting any price traction?
Yeah, well, I mean, I think the first point is there's always a lag between printing money and inflation. It's not like a light switch where you print money and suddenly you get inflation. There is a lag, and how long that lag is, we don't know. But I think what I'm talking about here is a way of diversifying some of your cash. I'm not saying you should put all your cash into gold, but I think just having a small proportion of your cash in gold could mean that if we did get inflation, then at least some of your cash may be protected. And it's just not having all your eggs in one basket. And I think that by putting all your cash or keeping it all in one currency in cash, that is perhaps riskier now than it used to be.
One final question. At the Brookville Capital Intelligence Report, which of course you write regularly on gold, I know that you are heavily invested in gold. Just to return, if I can, to this chart on the price of gold itself, as I say, currently trading at 1839. What should we be aware of in terms of some of the fundamental moves we're talking about here, which could give us an upside steer to this? And if that's the case, and in fact, I don't think really things have changed that much in the last 6 months since we've been at those record highs, why has gold come off? Are we not in a situation where there are alternatives? And I'm thinking here about cryptocurrencies, amongst other things, that people perhaps may be looking at rather than the price of gold. I mean, in your mind, are you still anticipating a higher price of the precious metal?
Yes. I mean, the thing is about gold is you can't print it. And I think that, is going to become a very important aspect of the fundamental value of gold moving forward. And yes, I think cryptos and there's a whole load of other areas that have perhaps detracted from the gold price. But we're talking about here as diversification, and I think that people should have some of their investments in a commodity. Gold is one of probably the best known of the commodities, but the price hasn't gone to the moon, but that doesn't mean it won't go to the moon. And I think people, they should look at it. On the one hand, yes, it is an investment, but they should also consider it as a form of insurance as well. Yeah. And depending on what level of risk you want to take will depend on how you enter the market and what you want to buy. But I think very few people have considered it as an asset class, and I'm sort of championing that they do. And I think more people should look at it. And I don't think it's ridiculous to have 1% of your portfolio in gold, for example. But I know probably a lot of your listeners have got none.
Yeah, and indeed, I know some as well have got more than that. And of course, I know that some people do advocate holding more, but it's interesting hearing your views. Simon, thanks indeed for joining us there on the line. Simon Popple is from the Brookville Capital Intelligence Report, where he writes regularly on the price of gold and some of the opportunities within the gold market. For more videos from us here at IGTV, join us on Twitter at IGTV and subscribe to our YouTube channel.